What are the biggest upcoming regulations for crypto to watch out for in 2023 that could either kill crypto as we know it or actually really help adoption for the industry? Well, as the fallout for FTX continues, we've heard the usual crypto needs to be regulated nonsense coming from the mouthpieces over on Wall Street. So it is time to look at the current regulatory landscape and the major bills that we see passing through the halls of governments around the world to see what might be in store for us in 2023 in the biggest and most important economies. We're going to be talking about India, China, Russia, the EU, and the USA in this video, many of whom are sadly not likely to be following in Brazil's lead with their massive recent announcement to recognize Bitcoin as a form of payment. Very exciting news, Brazil. But anyway, let's start with India. Unfortunately, India is still considered an extremely unfriendly place for cryptocurrencies. In a financial stability report filed by the Reserve Bank of India late last year, the RBI stated private cryptocurrencies pose immediate risks to customer protection and to anti-money laundering laws required, of course, to combat financing of terrorism. It's always about that, isn't it? And while the Supreme Court ruled in favor of cryptocurrencies back in 2020 after being challenged in court, nothing really has happened since then. The Reserve Bank's refusal to accept cryptocurrency business has caused a bit of a stalemate because commercial banks are feeling kind of like, what are we allowed to do or not? That was until, of course, last year. And while not a giant leap forward, Kotak Bank has emerged as the first major bank to open its doors up to the cryptocurrency community. WazirX has also opened an account with Kotak Bank, which is a big exchange in India. So now investors can receive and pay for crypto using their bank account at Kotak. Now that account apparently not operational yet at the time of recording this video. And while the government of India discussed its plans to draft a new crypto bill in 2021, little has actually happened with that. The most recent update came in April of this year, with the government saying that it will take a well-considered view on cryptocurrency, whatever the heck that means. As of today, no such bill has been made public though, and the government of India's approach to cryptocurrencies has, well, remained pretty unclear, pretty ambiguous, and relatively hostile. In case you're wondering why we're talking about India, it is the 6th biggest economy, so it matters what happens there. And now let's talk about the 2nd biggest economy, China. Since September of last year, China has stood firm on its public ban on cryptocurrencies. China has been a major cryptophobe for a long time. The government, anyway, people in China love crypto. They've been coming out saying stuff like, China does not recognize the legal tender status of crypto. It cannot be circulated as a currency inside the market, etc., etc. A report by Chainalysis after that last ban pointed out that it was most likely due to the amount of increasing capital leaving China as more and more citizens are using cryptocurrencies as a means to get their money out of mainland China, to get it away from the hands of the Chinese regime. However, Hong Kong regulators are starting to discuss their stances on crypto, reassuring the public that Hong Kong will not follow in the footsteps of mainland China. The one country, two systems principle, they say, forms the basic foundation to Hong Kong's financial markets, and the fact that the city can introduce its own bill in order to regulate cryptocurrencies actually just shows how separate Hong Kong actually is from mainland China. Elizabeth Wong of Hong Kong's Securities Commission was the one to state that. And even in mainland China, the Foreign Exchange Bureau has even pushed back against the current ban that happened, stating that China should integrate legislation to regulate the industry better and to separate it off into different regulatory scopes, different places for fundraising, different places for trading, etc., etc. Now let's talk about Russia, the world's 11th largest economy. Russian lawmakers have devised a plan that could see the nation create a state-run cryptocurrency exchange, with a member of the government coming out saying that it makes no sense to say that, well, cryptocurrencies just don't exist, we're just going to ignore them or try to ban them or any of that kind of stuff. But he says the problem is that crypto circulates in a large stream outside of government regulation, and that it represents billions of rubles worth of lost budget revenue. They want that ka-ching, ka-ching, man, as always, in taxes. Russia's finance ministry submitted a draft for crypto regulations in February of this year, and they promised to have an outcome by the end of the year. We're almost there. don't have an outcome yet. Russia's cryptocurrency market was valued at over $200 billion in early February. That's about 12% of the global market at the time. But it doesn't look like we will see a bill passed before the end of the year, as lawmakers already disagree on, whether or not to regulate miners and cryptocurrencies under one bill. Maybe they should be separate bills. Always this kind of BS, right? Despite where Russia stands on its crypto legislation, though, the EU and the US have other ideas in mind, reinforcing the sanctions on Russia to include cryptocurrencies in March, and then coming again and saying it in September. In the EU's 8th sanctions package against Russia, all Bitcoin and cryptocurrency wallets, cryptocurrency accounts, and custody services in Russia were banned. This ban was only possible, of course, due to the Russian Central Bank and the Ministry of Finance not agreeing on regulating cryptocurrencies in the first damn place, so people in Russia are forced to go abroad. Now they're facing these restrictions. The EU ban must have lit a real fire, though, because weeks later, Russia announced it would allow the international trade of Bitcoin. So that will be using crypto to make international payments for companies in Russia. Pretty crazy policy. Remember, Bitcoin's an open network, and as such, the EU has no way to stop or to circumvent the use of cryptos in Russia. They can't. That's the beauty of Bitcoin. With sanctions possibly having the opposite effect, actually, that they were intended to, it could actually stimulate crypto use in Russia instead, making crypto more mainstream there. Now, the possible timeline for a crypto bill in Russia is set to start sometime in the beginning of 2023. Now, before we discuss the coming regulations in the EU and the USA, I just want to let you know about my weekly cryptocurrency investor newsletter. It's called Wealth Mastery. It's jam-packed full of alpha on altcoins, airdrops, NFTs, DeFi tutorials, market analysis, and much, much more. Join our 50,000 weekly readers by signing up for free using the link in the description. Let's talk about the EU, the second biggest economy in the world when taken as a whole economic unit. Of course, comprising major players like Germany and France and all that stuff. This year, the EU released its Markets in Crypto Assets, or the MiCA bill. Once passed into law, it will require issuers of crypto assets to publish white papers containing technical roadmaps for platforms to actually register with the authorities in the EU, and to require stablecoin issuers to hold capital and to be prudently managed, which after all the stablecoin blowups this year, probably a good idea. It would place a cap as well on dollar-backed stablecoins. These rules will be a step in curbing the market share of non-euro denominated stablecoins beginning in 2024. The bill also covers the definition of crypto assets and calls a token a significant token. That is to say, if it has more than 2 million users, a market cap or reserves exceeding 1 billion euros, at least 500,000 transactions per day, and is operational in 7 EU member countries, which would capture a lot of coins like Polygon and BINANCE Smart Chain, stuff like that. However, many are wary of specific regulation details, such as the ability to identify users from their transactions, with fears that the EU will violate privacy rights in their push to regulate, with possible talks as well about a ban on all privacy coins, because privacy is not a right, it's a privilege apparently from the government. Governments, man, I tell you, every damn time. The bill is currently on its way over to the European Parliament for a final vote in the next parliamentary session, with the law, if passed, expected to take effect in 2024. Now let's talk about America. Perhaps the loudest cries for regulation are coming from the USA, with very strong voices against and for crypto in government. And with all the dirty ties to Washington, of course, that Sam the bank man exploited, you can't help but let the irony wash over you, of course. Now, one of the most vocal people in regulating crypto in the USA is anti-crypto Senator Elizabeth Warren, who called on financial regulators such as the SEC and the Treasury Department to treat crypto assets like other financial transactions. This month was when she called for that, stating that FTX's implosion should be a wake-up call to the industry. The problem, as Brian Armstrong, the CEO of Coinbase, pointed out in his response to Elizabeth, he said that FTX was an offshore exchange, not within the scope of the SEC's regulations, meaning that even if there were existing regulations in the USA, FTX International would not have been affected by those regulations. FTX US, yes, but there weren't the problems at FTX US, it was at FTX International. Former chief of Kraken, Jesse Powell, also said in an interview last month that existing crypto regulations in the USA have hurt American customers and companies. He argued that US regulators are driven by laziness and by convenience, not by actually trying to protect investors or do what is right by investors. One of the bills starting to make its way through the regulators' hands is called the Digital Commodities Consumer Protection Act of 2022. This was introduced earlier this year after secretly circulating around Washington for a few months. Now, this is the same bill that Sam the Bankman from FTX worked closely on to try and build a cushy little structure, even maybe a potential monopoly with his Ponzi scheme to operate within. Naturally, many industry leaders oppose this bill as it does empower the CFTC then with exclusive jurisdiction over the digital commodities spot market. Dubbed the DeFi killer, the bill would actually wreak havoc on US citizens' use of decentralized financial applications. That's, your Uniswap, your MakerDAO, your Aave, all this kind of stuff. The committee's overview of the legislation published states that the bill would require all digital commodity platforms to register with the CFTC, including, DeFi platforms like Uniswap and stuff, right? While there's no definitive timeline on when we can expect to see a bill passed in the USA, it is coming. They are working on it. In a poll this month as well, Grayscale found bipartisan support for clear US crypto regulations in the next year, with more than half of the participants agreeing that crypto is the future of finance. 37% saying they will consider candidates' policy positions on digital assets when they vote in upcoming elections. The poll also reveals, very importantly, that regardless of political leanings, most people in America, most American voters, want consumer-friendly crypto regulation that allows consumers to decide on how to invest into the cryptocurrency space. Okay, that's it. Subscribe now. See you next time.